And we are live with a late edition of Be the Boss of Your Own Money. And it is just another day in Crazy Town, USA. And boy, oh boy, can I tell you something? It's a little scary out there. It's actually a lot scary because cause and effect has gone out the window. I'll explain what I mean by that. The Fed hit the panic button yesterday. And the actually a researcher or someone at the CDC. Look, I thought I saw a researcher. I'll pull up the headline. Actually, has been diagnosed positive with coronavirus, and the situation seems to be deteriorating by the minute. And on top of that, am I going to have to get used to saying things like, "This is the worst day in the stock market since 1987"? Certainly is the biggest down day of my career. And I started in this business late 89, early 90. So this is one heck of a day. So first thing we're going to do is we're going to queue up the intro, and we're going to take a deep dive into stuff that we don't want to take a deep dive into, but we have to do this now so we can get through possibly the next few months. So here goes. I'm Mitch Goldberg with Client First Strategy. This is an episode of Be the Boss of Your Money, late edition. I'm here every day at 4:30 to explain to you the things that you need to know in order to get through this. Be the Boss of Your Money is about personal finance, investing, making you better overall financially. It's about news commentary. It's about putting it all together, a little bit of psychology, and a number of other things. But ultimately, it's about money, finance, personal finance. Okay. We put the personal back into personal finance. So today you had a day for the books. Dow down 3,000 points. It was more like 2,998 points or something. We'll call it 3,000 points. Down almost 13%, which would have triggered the second threshold for a trading halt in the stock market. The first one was hit this morning right after the Dow opened, 7% down. Next one is 13%. So we'll see what tomorrow brings. Is it too early to start doing a little bit of buying of some good stocks? What am I warning clients about? And keep in mind, my clients are different ages, but I'm going to start with the scary stuff, the tough calls to make, because every day I make tough calls. Every day I do make happy calls too. So I've been doing this a long time. So the crash of, when we went through the 2000 bear, 2007, 8, 9, I've made the tough calls, but you know what? It's what gets you through it. I'm not here to be a cheerleader for the stock market. I'm here to be a cheerleader for you, for my clients. So what I want to do is first tell you the advice, what I did. Okay. Starting yesterday, I'm reaching out to clients. There's talk about a potential closure of the financial markets. Let's talk about it. Even Secretary Mnuchin, you like the backdrop, by the way? Okay. Even Secretary Mnuchin, Treasury Secretary Mnuchin, had to address it. It's a step that nobody wants to take. It's really a drastic step. The only time in my career that the stock market was closed was right after 2011. It was closed for the following 4 trading days: Wednesday, Thursday, Friday, and Monday. It opened up Tuesday, the following Tuesday. There are a number of things going on. So what I told clients is this: if they feel that they need money in their checking account, I'm not talking about their account, their brokerage account, or money that they have with me. I'm talking about their checking account, especially for people who are using monthly distributions from their brokerage accounts to live on. And these people may have a lot of money. But people are just in time inventory, so they take what they think they need every month, and that's what they do. My concern is if there is a closure of the stock market, could that affect people's ability to get their hands on their money in their brokerage account when they need it? Because there's a difference between a money market fund in a brokerage account and a money market account at the bank. And so what I'm advising people is if you're taking monthly distributions from your accounts, then what you could do is you could front load 3 months or so of the funds that you need into your account and keep some walking around cash. Okay, I'm not trying to incite a riot or create more panic. It's actually when people start taking money out of their accounts, they run to the ATM machine at the bank. That's what actually, if everyone does it, that's what creates a panic. But I want my clients to be first online. I don't want my clients standing for hours in a line to get some cash out of a bank with other sick people around them and touching the buttons on the ATM machine. I mean, this is pretty heavy what I'm saying. But what I am saying to certain clients is if you are relying on your investment income, take a few months of it now. You can always put it back into your account. Okay. We'll just live on that for a while and have some walking around money. Have some cash in case you need it, in case, credit cards in a particular instance aren't working. It may be tough to get cash. And if you see a long line around the bank and you start to see people panicking, worrying about not getting their money out of a bank, and banks should also limit how much money you can take out of the ATM machine. They already do limit it, but they could limit it even more. You're going to be glad that you have your walking around cash to begin with. Why do I say this? This is crisis talk, right? Well, yesterday, the Federal Reserve hit the panic button. They hit the panic button and they told us how bad things really are. So when they said how bad things are, what they did is they announced a new quantitative easing of $700 billion that they'll use to buy treasury securities and mortgage-backed securities. They could buy a lot now, a little now. They could space it out incrementally, whatever they want to do, how they see fit. Cut rates to 0%. This is on a Sunday. I mean, that alone is unusual. And the Fed's meeting tomorrow and Wednesday. They could have waited till Wednesday, right? But things were so bad in their eyes that they couldn't wait. And between last week, $1.5 trillion of announcements, today the Fed's pumping another $500 billion into the repo market, short-term lending, et cetera, helping banks get their hands on much-needed cash. You're talking in the space of a week, all of the quantitative easing that we've seen in literally 1 week. If that doesn't tell you that the Fed was panicked, I don't know what does. Things are much worse than people thought. And when the Dow was up 2,000 points, and I just have to say this, the Dow Jones Industrial Average, S&P 500, the NASDAQ Composite, these are indexes. You cannot invest directly into an index, but you could invest in a security or that tracks or mimics an index. Okay, just have to get that out of the way. So what happened is the Fed basically saw that the commercial paper markets froze up, short-term paper froze up. There's no money going around. Restaurants, in the economy, basically the economy is grinding to a halt. I said this last week, if you watched the show, that a leveraged economy like ours could handle a slowdown, but a grinding halt is a completely different matter. It can't handle that. That's what the Fed saw. The problem is you think, well, why didn't financial markets react positively, and why didn't the Dow go up and the S&P go up? Because the Fed could pump in as much money as it wants, okay? But you can't get people to spend money if they don't want to. You can't get velocity of money multiply. You can't get money moving. So basically, the economy is slowing to a grinding halt. You saw that airlines might actually consider cutting operations even more. They've already been doing that, maybe a ban or a freeze on domestic travel. Although later in the day, I saw a news flash that said Trump said he will bail out the airlines 100%. I don't know what he means by he, but maybe he didn't say he. But the point is, I saw something to that effect. Maybe it'll work. Maybe it wasn't. I don't actually know if it's a real headline or not. I did see it on CNBC, so I'm going with the, that it's a legitimate headline. Someone at the CDC contracted coronavirus. I mean, the headlines are brutal. And now, over the weekend, we're told don't congregate in groups of more than, don't be in a group of more than 50 people. Now it's down to 10 people. Germany closed its borders, something that Angela Merkel said she would not do. Canada closed its borders except to Canadians and Americans. That could change for Americans. France, Spain, all lockdowns. Could I see the United States going under a similar lockdown like Italy and France and Spain and now Germany? Yes, I could. It's that bad out there. That's what the market's worrying about. Investors have no idea how to value stocks in this case. And I'm giving you the reality of the situation. Now, maybe we'll come up with a vaccine pretty quickly and everybody will be happy. I think that's probably wishful thinking for the short term. So here, I'm going to share with you my screen share. You're going to see this. I sent this out yesterday, kind of like a humble brag, but I just want to put this out there. Yesterday, when the Fed made the announcement, I got this out almost 24 hours ago. For financial markets, this is its version of shock and awe. How worried was the Fed really? This tells you a lot. Was the Fed right to panic? I always like to say panic is not a good thing, but in this case, yeah, they were right to panic because when they took a look into the abyss, they saw bad scenarios. Bad scenarios. So this is also why, gold went down last week, last Friday. People are selling what they can sell, not just, or another. If investors are wholesale going out of the market, out of the stock market, and they want to take money out of financial instruments, they're not just going to sell stocks. If you see them selling off bonds and gold, people just want their money. That really is a panic market. That was not totally the case today. Today's really a stock market phenomena. On the good side, Amazon said they're going to hire 100,000 warehouse and delivery workers to keep up with the demand surge amid the coronavirus outbreak. I mean, basically, the whole country is going to be relying on Amazon. I mean, that's everyone's plan, right? I'm going to go home. I'm going to have internet access at home uninterrupted, and I'm going to be able to order whatever I need from Amazon, watch what I want on TV, Netflix, etc., YouTube TV, whatever it is, and I'll be able to talk to people through Zoom and FaceTime and you name it. Okay, so that's what's going on. But I've got a couple of things to cover here, and I said I would talk to you about worst case scenarios. Okay, just want to get my quote on gold. Okay. Yep. Gold was down. Now, gold is a safe haven. Gold typically goes up in times of stress. See what I mean? It was down. People are not just selling what they have to sell. They're selling what they could sell. This is what I was talking about last week. The first shoe to drop was coronavirus. The second shoe to drop was oil. You saw that with Saudi Arabia and Russia. And if enough shale oil companies go out of business, that affects bond markets, it affects banks, etc. And now we have it looks like either a financial crisis or financial contagion. It's probably both. So here's the worst case scenario. All right. Worst case scenario, and I'm borrowing some of this from the media, from Washington Post. Let's get back to share screen so you can see exactly what I'm looking at. Okay. But essentially, okay, consider the ventilators first. It's expected that up to 150 million people could contract coronavirus. The overwhelming majority will be fine. You could feel some symptoms. Some people won't. Some people might not even realize that they had it. But about 5% of that, so that's 7.5 million people, are expected to have it pretty bad, requiring hospitalization. Okay. And out of that, 1% of the 150 million could be severe. Like, hopefully they'll live severe. Okay. And from what I understand, hospitals are seeking motels and hotels because they're expecting a large portion of their human capital to catch coronavirus, to test positive. You can't send these people back to their families because then they'll spread it to their families. So you have to be able to give them some kind of residence. So hotels, motels, that sort of thing. And with that many people dying, that means you have to basically rationalize healthcare, triage older people, people in nursing homes nursing homes are basically, from what I've been hearing, I'm not trying to spread rumors. I'm hearing the worst things. Okay. Decisions are going to have to be made like they're doing in Italy because we're worried that the healthcare system could be overrun. And this brings into what do you do with all of the deceased? And this brings into cemeteries, morgues, crematoriums. And man, oh man, this is just, I'm going into a dark place, and so are you probably. And that is why the Dow went down 3,000 points. And this is why people are so worried. If people aren't spending money, Governor Cuomo, the governors of Jersey and Connecticut, Ohio, California, Washington, I think Illinois, all over the country, more and more governors declaring a state of emergency. So that's what's weighing on the market. When do we get out of this funk? So I wish I could tell you. It really depends on how everyone acts in terms of social distancing. It's important. I know on Long Island, schools are closed. But it doesn't, the point of that was not so you could take the kids to the movies, take them to the mall, take them out for a haircut, take them out to lunch and things like that. The point of it is to get social distance from all the other kids, from your kids, so we don't spread this virus. So my sense is tougher measures could be coming. It's now scientists say that the airborne quality of the droplets stay in the air for longer than previously thought. Trump himself said today that you shouldn't congregate in groups of more than 10 people in a live presentation. 10 people. I mean, that's nothing. I mean, so this is what's going on. So that I have nothing to sugarcoat this with. So the question comes back down to the stock market, the economy, personal finance. Okay. What I would say, Judy, I see your text, by the way, and I know you're watching this, so thank you. I want to say something positive. I did something today that I haven't done in a while. I actually put in a couple of buy orders. I can't tell you what I bought in a video or a live feed. If you want to know what I'm buying, stocks, other securities, you're welcome to reach out to me directly, and I will be glad to share with you what I entered buy orders in. Okay. I don't know if this is the bottom, but after about a third of the market has been lopped off, and we're pretty darn close, if not where we were in the December bottom of 2018. Remember the Christmas Eve bottom of 2018? We're right around that point. That is amazing how much we've given back. And now, if you watch the show, you know that I've been saying, don't be a hero yet. Not time. Hold on. Make sure if you do buy something that it really has a good fit in your portfolio with the rest of your portfolio. So if the market continues to drop, it won't be a problem for you because you bought what fits in with your portfolio. It's a portfolio decision, not just a buy a stock decision because it'll snap back up. It's not what you want to do. And I'm not doing that now, but I'm looking at certain allocations into areas that I don't have enough exposure into. I also believe that now it could be a good time for some rebalancing. I don't like to rebalance overly frequently, but the size of the move in the last 3 weeks or so has been so dramatic. It's really, you're probably thinking, how could things have been so good and go so bad? Well, if you're out there, I'm just going to take a quick look if anybody's out there. Okay. And yeah, I see a few people out there. We've got a couple of comments, maybe some questions here. Take a look at that. Okay. Hey, Carlos, good to see you. The town of Palm Beach is going to Palm Beach, Florida, going to curfews tonight at 9 p.m. The virus is in Boca. Deborah, I love you, Mitch, but spreading panic is destructive. It's more useful to instruct people on what they can do. We need to band together. I agree with you, Deborah. I am not trying to panic people. Am I saying the plastic cards are of no use? I'm worried about it. All Massachusetts schools closed for 3 weeks. From Russell, thank you. Scott, be blessed, be well. Thank you, my man. And Anthony, imagine if the internet crashes. I mean, if the internet crashes, that's the only plan B. We don't have like a plan C and a plan D. Everyone goes home, works from home, and uses the internet. So the other thing I thought of is if we have a power outage, everybody has all that frozen food in their freezer to live on for the next couple of weeks. Okay, so Deborah, to your point, I'm a financial advisor, and I'm here to give people the risks and the rewards that are involved with investing and overall personal finance decisions. And I'm giving people a worst case scenario. We probably won't get to a worst case scenario, but we could get to something between a best case and worst case. We don't know. But what I'm telling people is this is why the stock market basically crashed. Okay, down 3,000 is a heck of a move in the Dow, just about 13%. Why? I'm giving you the reasons why. And I get it. I'm not trying to make people more scared, but I also have to take care of clients, right? And I have to tell certain clients who rely on their monthly distributions from their accounts that if Secretary Mnuchin says we're closing the stock market, we're closing the financial markets, what do these people do? How do they access their money? It has to be done. Now, is plastic going to go away? I don't think so. I think, it's all technology based. It's all web based. It's all internet based. But just in case you're in a position at a supermarket, a gas station, someplace, it happens to be that you need cash, you'll be glad you have it. And if you hear people can't get cash or you see the lines, you remember, Deborah, in 2008, I remember I was driving up Route 110. That's Broad Hollow Road. I was going by the, the Waltman Mall and the Washington Mutual branch, which is now a Chase branch. There was a line of people around the building and down the street. Okay. Was it panic? Yeah, you bet it was panic. Over 1,000 banks went under in 2008, 2009. Not one single person lost their money, though. Everybody was able to get their money. All the banks were bailed out. They were taken over by bigger, more solid, stable banks. However, do you want to be online waiting for money and touching that machine, et cetera? I mean, is saying social distancing panicking? I mean, if you think about how many people are out and about and going to the supermarket and Costco and searching for toilet paper. So I hear what you're saying. I apologize, everyone. I don't mean to panic people. I'm giving you the scenario of what happened today. And this horrible scenario, the Italian scenario, we're calling it, is what people investors are worried about. It could ease up. It could. And let's hope it does. And I hope I'm wrong. And everyone could say, Mitch, you panic people for no reason at all. Okay. So that is that. On a positive note, the Dow is down a lot. Stocks are down a lot. And I do see some companies from my vantage point that I'm buying. I'm a buyer of a few of them, and I'm not buying aggressively. So I want to tell you how you could purchase stocks, and you don't purchase them all at once. You could purchase them in small increments, maybe buy them a little now, a little later. Come up with a plan, though. Let's say you'll put a limit order in for 5% more of a particular stock and 5% more, or when the price drops 5%. But if you don't have a plan to do it and you see the market go down, you won't move on it. On whatever you were going to do, you'll just say, forget about it. I'm not going to do it. All right. So that basically is the story on that. Second thing I want to talk about, and this is going to be a bigger topic going forward. I'm live so far for 24 minutes. This is a little bit longer than I expected. But like I said at the let me stop sharing this. Like I said at the top of the show, there's really not a whole hell of a lot that's good to say about it. I know this is a pretty negative episode. I'm hoping to come back and do something more positive. And I'm actually groping in my mind like the wheels are turning right now to try to get to a positive place. So I'll leave you with this. If you're a long-term investor, you'll be okay. I'm very comfortable with the way my clients are positioned, long-term investing, and 6 months, 12 months. I definitely think in 12 months we will be through this. It could be sooner. At first people thought Wuhan virus, we're not going to get it here. Then when it came here, it'll just be a very isolated thing. Then it'll just be different, just be localized. And you saw what happened. Oh boy, here I go again into that dark place. So I'm going to leave it now. I'm going to get out of this live stream. Chin up. Long-term investors will recover. Personal finance dictates that you have a certain amount of months of cash in the bank. If the cash is not accessible, then it doesn't really count, which is why I said what I said before. All right. We'll look for positive things, but I don't want to sugarcoat this. I'm giving you the real reason why markets went down. It's the coronavirus. The Fed could do whatever it wants. Mitt Romney floated the idea of sending every adult in America $1,000, maybe a payroll tax. But if people are getting laid off and unemployment is skyrocketing, a payroll tax is not going to help those people. So I think that one is DOA. So we'll see. And even if you send people money, if they can't go out and spend it, then the money is not going to help. All right. Tomorrow, I promise you, I'll come back with something more positive. I'm doing my best here, and I'm just giving it to you the way it is. I'm not a bear. I'm not a bull. I'm not a cheerleader for the stock market. I'm a cheerleader for the best personal finance person that you could be. That's all. I'll speak to you soon. Comment, ask questions in the comments, and I'll be happy to answer them. Okay? Bye.